You are now about to witness the strength of street knowledge.
Oh, it's that time. Say, man, I want to welcome y'all. You know it's a Sunday night. It's time for Dining Room Dynasties with my good friend, Leah Rutherford. Yeah, I'm the 5-star general. I just sit here and suck up knowledge, man. So y'all kick back, man. We're about to go in, but I need you to share this video. I need you to share it. Share it to everybody you know. Share it to every group that you got. My girl finna put you in the middle of the money, man. And that's what it's gonna be. Let's get to it. Say, I want to welcome y'all to another Sunday night episode of Dining Room Dynasties. We're still trying to get our feet up on this, but that's okay, because we're going to be all right when it's all said and done. I see my girl Leah Rutherford is in the building. What's going on, mama?
Happy to be here as always. Ready to make it happen.
Say, man, I mean, some of the pointers you gave me, I think since the last time we talked to him, you were so informative that I ended up joining your team. See, I'm not playing with y'all. So when somebody give me the game and it makes sense, if it make dollars, it makes sense. So she gonna give us the game tonight, and I'm gonna sit back and I'm gonna listen and see what else I need to be doing. You got the flow.
Well, I'm happy to be here. Happy to be here with you, 5-star general, and happy to be here with the listening audience. Listen, you guys, this is such an awesome opportunity, and I don't take it for granted. I don't take it lightly, and I'm ecstatic about what's to come in this 2021 year. Look, time waits for nobody, you guys. And as I always jump in saying, indecision is no decision. So let's make some decisions today. Now, my name is Leah Rutherford, and I live my life on purpose, where purpose is an acronym that stands for that I am P, psychologically, U, unemployable, R, on a relentless P, pursuit, to O, overcome the S, stigmas of E, entrepreneurship. And through the vehicle of life insurance, I have been able to launch an amazing opportunity that has put me in the position to share phenomenal information with my people and other communities all over the place. Now, what I want to do today.
Say, if y'all going up to the inauguration, y'all need to get this life insurance from Leah before you leave, because you might have some problems in DC on the 20th.
And make sure you got on your chucks and your pearls, okay? Because we're going to represent for the inauguration. That will be January 20th. Let me make sure that I am shouting out for my girl Kamala, and that we will have on chucks and pearls to rep for our historical inauguration. And so with that being said, you guys, yes. What I want to talk about today is the power of living benefits. And not just about the power of living benefits, but also that the company that I'm connected with is offering equity. So now these are two very different topics on the wide spectrum, one end to the other of this particular conversation. But let me tell you why I'm choosing to speak about living benefits and why I'm choosing to speak about equity. All right. I'm choosing to speak about living benefits because so often when we talk about life insurance, many of us look at life insurance as something for the dead. And I hear a lot of people say, oh man, I don't want to talk about life insurance because that means I'm talking about somebody dying. And we don't want to talk about somebody dying. Or I've even heard some people say, I don't want to leave, anything necessarily to anybody. They may not have children. They may not have beneficiaries that they want to send or leave an inheritance to. But listen, you guys, life insurance is not just about the dead, it's about the living. And so I am certainly ecstatic about being able to share with you some of the experiences that I've had, as well as some of the knowledge that I've gained over this past year in the life insurance world. I'm a 25-year educator that began my education career at none other than Ryan Middle School in 3rd Ward, Texas. In 1995, had the esteemed pleasure of leading our science department and also being able to get trained in one of the most elite science labs in the Houston area, the Rice Model Lab. went from there and decided that I wanted to launch into entrepreneurship and became a consultant early in my career, and then became a full-time entrepreneur probably about 15 years ago. Since then, have always connected with opportunities that allow me to grow and educate others, because I am an educator at heart. And so anytime I can take information that I know and I can share it with others, I am still actively educating, just being able to use cross-industrial spaces to share information that empowers our people, because knowledge is power. And the more knowledge we have, the more powerful we are. And I want to make sure that I am leaving an indelible imprint in our society, in our community, in my family, and globally, to make sure that people have access to empowering information. And so I'm going to jump right into one piece that I wanted to make sure you guys are aware of. I work with a company that allows me to broker to about 40 plus insurance agencies. And in that process, we offer many different products. But one of the incentives that our CEO brought back to the company this year is a word that I wanted to talk a little bit about, and it's equity. This year, the company CEO, Pat Bet-David, who is the founder of Valuetainment. Valuetainment is one of the largest entrepreneur YouTube stations in the world, with over 2.3 million subscribers. And in Pat Bet-David's incentive, he offered equity in this company. Now, not only did he offer equity in this company, he offered 30 exotic cars that you can win as you climb the ranks in the company. But in 2021, there are so many opportunities to win. I'm just sharing with you one of those, okay? And when I back it up and talk a little bit about equity, equity is a stakeholding in this company where 200 shares are going to be disseminated to people that are growing in this company this year. And the elite position of marketing director, which is also known as broker in this company, has offerings of over 200,000 shares that you will have access to have as a part of your wealth building and assets in your own personal financial portfolio. And so the beauty of having equity in a company is this. Before a company goes public, those shares are usually going to be very inexpensive. And when we talk about shares, we're talking about a piece of ownership in a company. When that company is still privately owned, privately held, before it's ever sold or a part of the New York Stock Exchange, you usually can get access to ownership in the form of shares in that company. And so sometimes you can buy those shares, sometimes you can be awarded those shares. And in this case, our CEO is awarding us shares. This is the second time he's offered equity in the company. And again, I mentioned that there will be 200,000 shares that he's actually giving away. But let me tell you the power of this. In a few years, he is projecting to take this company public. And when companies go public, their shares jump in value. And on the day that public happened, that going public, the public offering happens, often called an IPO, the initial public offering, that company goes from being a privately held entity to now being a publicly held entity. Many people are able to become extremely wealthy just because the value of the shares go up. Okay. And so we were looking at, one of the companies whose stocks are now at $3,500. And that company at one time had stocks that was $1,500. So $15. So imagine if you bought stocks in a company and you only paid $15 for, let's say, 100 shares, 100 pieces of that company. Okay. 100 stakes in the company. And then those shares, which were originally originally $15, are now $3,500 each. Then you have just become instantly wealthy. And that is the power of having equity in a company. And so I would love to speak with anybody who understands the power of having equity in a company, because that is one of the offerings that our CEO has on the table for 2021. In addition to that, he will be giving away 10 Corvette C8s, 10 Lamborghini Portofinos, 10 Porsche 911s, and 1 Lamborghini. I said Lamborghini. Let me see. Ferrari Portofinos. So let me say that correctly. 10 Corvette C8s, 10 Ferrari Portofinos, 10 Porsche 911s, and 1 Lamborghini Aventador. Those are also a part of the incentives for being a part of the growth in this company in 2021. So that's for people who are driven by monetary and material incentives and would like to have more information about how you can be in the pool to win one of these 30 exotics or to get connected to some of the shares and stocks in this now privately held, soon to be publicly held company. Now, let me tell you about the company.
They can't hear you. You're muted.
I am now unmuted. Thank you. And are you able to see my screen, Monroe? Yes. There it is. Thank you very much. All right. So the name of our company is PHP, People Helping People. And we offer the following products and services. The 401k rollover, IRA, Roth IRA, life insurance, long-term care, annuities, and debt settlement. Now,
Hey,
I'm not.
Leah.
Yes.
Leah, I
Yes.
just want to send a shout out. I ain't gonna say their name because that ain't people business. But I hooked you up with somebody this week, and they sitting here right now gaining more knowledge. They became a client this week, and they
Yes.
saw what I was saying was the truth. You guys really need to pay attention, man. You know, I see the numbers ain't high, but that's cool because the ones that listen, she gonna put you where you need to be. I just wanted to throw that out there.
Well, I'm excited to know that we have one of our amazing clients that are with us this evening. And so guess what, you guys? I'm just going to give you some knowledge about the power of living benefits. And so I mentioned that we have 6 different products, and that's going to be the 401k rollover, the IRA, Roth IRA, life insurance, long-term care, annuities, and debt settlement. Now, as I mentioned, we are brokers, and so we represent several companies, but some that are listed here would be National Life Group, AIG, American National, Mutual of Omaha, Fidelity Guarantee and Life, and of course, Nationwide is on your side. Those are some of the companies that we broker with and for, companies that have existed for hundreds of years, some 140, 180. I know we were on one of the trainings last week with Foresters, and I want to say they were celebrating their 145th anniversary. And so we are connected with companies that have been a part of the financial services world for a very long time. And if I had to decide a place to place my money, I certainly would want it where I know there is stability. Now, when we look at the different types of life insurance, I mentioned earlier that I wanted to talk a little bit about living benefits. But before I do that, I want to give you the 3 different types of life insurance that exist in the marketplace. The first is going to be your term. And when we look at a term policy, I had a 34-year-old lady come into my office and she wanted a $500,000 policy. For this particular type of policy, it covered her from age 34 to 64. At 64, it expires. But from age 34 to 64, she's covered. The $500,000, that is the value of the policy. If she were to die, her family would receive $500,000. Now, if she was to outlive this policy at age 65, she is no longer covered. The $500,000 goes back to the company. Now, in this case, it is a very cost-effective policy. It is called a term because it has a beginning and it has an end. So therefore, it does expire. So the upside it is cost effective. The downside, it does expire. And in this case, she was paying $30 a month for the policy. Now I'm going to jump down to the second.
Let me ask you a question, because
Yeah.
when you say it expires, and I'm just trying to give them a clear understanding, that means when you buy 72, 73 years old, and I know we all going to live to be that long, if your insurance expires, it's going to be hell to pay the captain trying to get you some more insurance.
That's absolutely. So what that is saying is at 34, she was able to get this policy for $500,000 for only $30 a month. 30 years later, imagine she probably has increases in ailments, of course, increase in age, because in the life insurance world, youth is your ally. And what I mean when I say that is when time is on your side because you are young, your monthly cost is going to be much less and you're able to get a lot more. And not to mention what you're able to save if you use this life insurance as a vehicle for investing in yourself. And we'll talk a little bit about that when I get to the third type of policy. And so that leads me to the second type of policy. In this case, it is called an ROP. Imagine your State Farm or Geico car insurance agent comes to you and says, Monroe, you have been such an amazing client of ours. We want to pay you back all of the premiums that you have paid to keep your life insurance, your car insurance for the past 5 years. Here is a Geico return of premium check in the value of all of the premiums you have paid for the past 5 years to keep your car insurance intact. Now, that would be awesome, but it doesn't happen like that, y'all, in the car insurance world, but it does happen like that in the life insurance industry. Hence, the name of this policy is an ROP. So now maybe some of you are not familiar with the fact that you actually can get a refund at the end of your term on your policy. And in this case, of course, the lady is going to pay a little bit more for this type of policy. She's actually paying $100 a month for a $500,000 policy. She begins this policy at age 34. She's covered up to age 64. If she was to die between 34 and 64, her family receives $500,000. However, if she outlives this policy at age 65, she has to return the whole $500,000 worth of policy back to the company. The only thing she does get to keep in this case is the premiums that she has paid over the course of 30 years. In this case, yes, she does invest a little more. So she's paying $100 a month for this type of policy. Now, if you take 100 times 12, that's 1,200, and you multiply that times 30 years, that is going to be $36,000. If she outlives this policy, she will get a return of her premium at age 65 in the amount of $36,000. So again, the downside of this policy is, yes, it is a term, so it does expire. But the plus of this policy is that there is some guarantee built into it. Therefore, she gets a return of her premium in the form of a refund of all the premiums she's paid over the past 30 years. All right. Now, that leads me to, and if I were to compare these first two policies, let's say to cars, the term policy would be more like your Toyota Camry of policies, if you will. Your ROP would be kind of like your Mercedes, Lexus, BMWs of policies, okay? But this permanent policy, y'all, is going to be more like your Lamborghini, Ferrari of policies, because this policy has three main benefits. It's got a death benefit that, of course, covers you if you die. But if you were to live to be 34, 64, 94, 104, I call this the till death do us part policy, because it literally stays with you until you expire. You will expire before the policy will. Okay. The second benefit is going to be what's called living benefits. In the event of a critical, a chronic, or a terminal illness, something that debilitates you and prevents you from being able to carry on your everyday, regular adult duties, you are now in a position to access the value of the policy towards your care. That care could be hospice. That care could be rehab, hospitalization. It could be from COVID and you're the breadwinner of the home and now you are unable to work. Brief story, I had a gentleman about 2 years ago. We were encouraging him to get a policy. It took about 2 years to get him to agree. And 6 months ago, he finally did agree to get a policy. Unfortunately, 2 months ago, he suffered a massive stroke. Fortunately, had this Lamborghini of policies and was able to access his living benefits. Did not die, thank God, but was the sole breadwinner in his family. His wife was a stay-at-home mom. They have 3 children, and now he was stricken with a stroke. He was able to access his living benefits, and right here, just after Christmas, just before the new year, was issued a $150,000 check that was able to cover the costs that his family is now incurring because of the illness, a chronic, critical, or terminal illness that he has just suffered because of that stroke. And by the way, he has not returned to work. But imagine being able to access living benefits like this that can help you in an event where your family is suffering because of a medical trauma. 30% of bankruptcies that happen with families occur because of medical ills, medical bills that have accumulated, and the family has been unable to take care of that debt. This is a solution to that as a problem. And especially with COVID running rampant, it is important that we are properly positioned to take care of our families, to take care of ourselves as individuals. That is our due diligence. It's our reasonable service so that we are not a burden to our families and we are not a burden to society. Enough of the GoFundMes and the chicken dinners, you all. We've got to be responsible. And this particular type of policy has amazing benefits that can set you up so that your family is in a position to be properly taken care of in the event of a tragedy. Now, the third benefit that's built into this policy is cash value. And this cash value is very similar to a savings account. Now, the beauty of this particular cash value in a life policy is that it has a much larger interest that is being paid on your monthly investments. So that compounded interest, you guys, is what allows the wealthy to get wealthier. But it is also what causes many of us to lose a lot of money because we have high interest rates that we're paying, let's say on credit cards or on car notes or etc. I can give you a personal story, and I'm actually facing this right now. And then I'll tell you the exact opposite of that. So I bought a car 5 years ago, you guys. And the car only had 2,500 miles on it when I got it. It was considered, certified used, but it was a brand new car. It was still purchased within the same year of the car's year. So it was 2015. I bought it in December of 2015. And it's not a high-end car or anything like that, you all. And 5 years later, I have not even paid $10,000 on the principal of that car. Now, I paid over $500 in a car note. Yes, it was a bad deal, period. Okay. I have not put a dent in the principal, and it's because of the interest on the car. And now that's the downside of what happens when you're paying high interest. So let's look at the upside of what happens when we have our money in a vehicle that pays us high interest. Okay. I looked up the cash value option the other day. And in a typical savings account, let's say a Citibank, for example, your savings account in a Citibank is going to gain you about 0.5%, less than 1% right now is the going interest that you will receive on a savings account at Citibank. Okay. So there is a rule. It's called the rule of 72. And what the rule of 72 does is it tells you how long it's going to take your money to double when you have it in an interest-bearing vehicle. So if we look at Citibank, and let's just use $500. If Citibank is only paying you 0.5%. You take 72 and you divide it by 0.5, that interest rate. And that gives you an answer, that quotient, that solution is 144. 72 divided by 0.5. 144, okay? 144 represents the number of years it is going to take for $500 to become $1,000. If you put $500 in a Citibank savings account and you let it sit there and grow. Now, I'm giving you the air quotes because at 0.5%, it would take 144 years for $500 to become $1,000. Okay. Now, let's skip over to the comparison, which is the life insurance policy that I mentioned earlier, this Ferrari of policies, the permanent policy. There's what's called cash value as the third benefit in this policy. Currently, the cash value interest is compounding at 8%. So now let's use the same formula, the rule of 72. We're going to take 72 and divide it by 8 because that's the interest rate on this insurance policy. 72 divided by 8 is 9. Now, as I mentioned, that answer represents the number of years it will take for your money to double. So we have this same $500 in now a life insurance policy called an Index Universal Life. And that takes 9 years for $500 to become $1,000. Now you compare, okay? 144 years to double your 500 to 1,000 or 9 years to double your 500 to 1,000. And think about that. The only difference is which one of them has the best interest rate that is being paid to you. So now think about how many times you've had a credit card that you've paid crazy interest on. You looked up and you paid, like I said, with my car. I've paid on a car for 5 years, y'all, over $500 a month, and I'm still only down less than $10,000 of what I owe on the principal. On the other side of that, if we're being smart about our money, we're going to put it in vehicles that give us a greater return so that we can see faster growth on our money. Okay. And this is a benefit of a life insurance policy. So you heard me mention, the power of living benefits. And I wanted to talk about that a little bit today because I need us to understand that life insurance is not just about the dead, but it is also about the living. It's not just about leaving something to somebody when you die. It's also about being able to be your own bank. Imagine if you could say, I am the bank of Leah Rutherford. I am the bank of Jerry Wayne Monroe. I am the bank of whoever. And you are your own bank because you are now controlling the vehicle that you are investing your money in. And now you have the power to grow that based on your knowledge about that vehicle. Wouldn't you much rather be in a position where you are in control of that growth? Wouldn't it make sense for you to be the one that has access to your investment and controlling how that investment is able to roll out and take care of you while you are making investments in a home, taking care of college for your children, being able to buy a car cash? Do you know people use their life insurance investments to buy vehicles and houses in cash so that they're not paying interest rates that are robbing them of their wealth? Did you know that life insurance policies are the secret of the wealthy, that many people are not even aware of how to use it as an investment vehicle? Are you aware that if this makes sense, that sense makes dollars? And I'm going to show y'all how to turn some of those cents into real dollars. We're going to continue this dialogue, you guys, but I want to make sure that if anybody's out there and you would like more information about what you hear me sharing here this evening, that you can reach out to me. You can email me at lean2leadglobal@gmail.com. So that's lean, L-E-A-N as in Nancy, the number 2, L-E-A-D as in dog, global@gmail.com. I can also be reached at 512-862-7282. That's 512-862-7282. Listen, as me and Mr. Monroe had our last show, the last conversation that we had, he said, look, I don't know what you was doing, but that made a whole lot of sense. And I want to get in this journey with you. And I'm excited to have him connected to the team. And as he mentioned, we've got a few viewers on here that are even new clients. You guys, this is the time to invest, not only in the company that I'm speaking about, because we are still privately.
What happened? She'll be right back, y'all. Say, but on the real, man, you need to pay attention to her. She's not faking. This is not a game. You know, you need to stop thinking that GoFundMe is the way that you got to bury your people. It's not a smart move, because what happens if people don't want to invest in your GoFundMe? Then you will not be able to properly put your people away. There we go. I don't know what happened, but I kept talking while you was gone.
Thank you. StreamYard decided they wanted to do an update on my computer.
Wow. Okay, we'll finish it up.
So wrapping up, ladies and gentlemen, glad to see that one of our amazing clients, in fact, actually 2 of our clients was on here this evening as well. And we will continue this conversation. I am the amazing host of Dining Room Dynasties, where we use our God-given gifts to create a lineage and a legacy for our very own generations. That is our responsibility. The word says it is a wise man that leaves a legacy and an inheritance for his children's children. And so I want to continue to share the wisdom with those of y'all that are here to share with us on Dining Room Dynasties. And I thank you, General, for hosting me this evening, sir. It has been a plum-pleasing pleasure and a privilege. And I look forward to this conversation again to come.
You are now about to witness the strength of
Say, man, it don't take that long to become smart. You just got to tune in every Sunday night and she going to lace you. Now, if you're looking to start your own business, because that's what we really need to be doing, you need to inbox her. You need to get with her, because she can help you get to where you want to be. Ain't nothing like just calling up the travel agent and saying, I want to go to Jamaica on the drop of a dime. But it can happen. It can happen. You feel what I'm saying? So until next Sunday, my friends, me and Leah holler at you. Dining Room Dynasty. You know what to do. You either on the plate or you on the menu. We'll holler at you.